Well, hello. Let me grab a coffee and I'm going to have a chat with you about how you can actually improve your trading by doing very subtle changes.
Wait. Matron, take them away. Oh.
And a warm welcome to one and all. And if this is your first time here, I am the big fella that is the Scruffy Trader. What I'm trying to do is put trading in the real world. Maybe show you a trick or two along the way. And today is really, it's a few thoughts from the morning call I had this morning with the guys. Now, I run a small group called the Scruffy Squad, and every morning we get together and we have a chat. And one of the things that was brought up was you can have a huge win rate, say 80%, but still not make any money. And one of the discussion points was, well, if we're winning 80%, we're clearly doing something right. But what about the 20%? What is wrong with it? Now, the danger with trading is it's very simple to sort of jump from one course to the next or one chart to the next. Think, oh, this time frame's the best one, this time frame's the best one. Oh, what product should I change? Or what lot size? I think what happens is it's almost like a dog chasing its tail. You're constantly just going round in circles. If you have a win rate that is substantial, and you're still not losing money, well, your trading style has told you where the problem lies. The problem lies with the risk, the investment. And then you've got to ask yourself two questions. Am I just trading on a hope, and that is kind of no stop to an extended wide stop, and praying to God it comes back, because the markets will inevitably come back, and you've just been lucky? Or are you putting too much stress on your account in the first place? Personally, I think it's probably the latter. Maybe it's a bit of the first one as well. Now, if you're putting too much stress on the account, that comes from two areas. It comes from your size position is too big, and the other one is over trading. Because what happens is you fall into sort of the invincible syndrome. And the invincible syndrome is you genuinely think you can't lose. So you win, you win, you win, you win. And you probably followed all your rules at this point. You know, and you should have rules in place. However, what happens is you become arrogant. And you believe, well, basically, you can't lose. So what inevitably happens is you think, well, if I can't lose, I might as well up the bid size and get some more money. So you do that. But you also think, well, I can't lose, so I'm going to take this trade anyway, even if it is slightly substandard. And then what happens is the market shows you who's boss. And not only does it show you who's boss, it'll bring you down to earth with a bang, because there's too much stress on the account. So if you are to change your trading, I just wanted to do a very quick video to give you some advice. And I do talk from experience. And if you've never seen me before, do go through the channel, do subscribe to it, because it genuinely helps. But I'm one of the few that show my statements, and I trade in real time. Okay? And all of the Scruffy Squad have seen me trade real time. They've seen my accounts. They know exactly what I do for a living. So I do speak from somebody who's seen it, done it, but does it on a regular basis. Okay? So please take this as advice. What whatever amount of trades you take in a day, however many, whether you do 10, 20, 30 or 2, half it. Half it down. So if you're doing 10 trades a day, only do 5. And personally, I think that is too many. I think 3 trades a day is more than enough for what you need. You can get a good wave on the morning, you can get a good wave on the afternoon, and you get a good wave in the evening. 3 good trades. Then up your time frame. So whatever chart you're finding your trades on, you might be looking on a 5-minute chart. Move it up. So if you're looking at a 5-minute, be looking at an hourly. If you're looking at hourly and you're still finding it wrong, go to a 4-hour. If you can't find it on a 4-hour, go to a daily. And you'll find looking at the higher time frames slows you down. But it not only slows you down, it opens up the chart. Because when you're down low, it's chitter chatter. And your decision should be made well before you get to the low time frame. Personally, the way I do it is I funnel down into an hour, and then from the hour I've pretty much made a decision. I'm then looking for confirmation on the lower time frames for a decision that's already set in stone. And then lastly, don't overstretch the target. You know, look at your ATR, divide it by 3, and then divide that by 3. And when I say ATR, I mean the daily ATR. So if you're looking for a steady day trading target to get in and out of the market relatively safely, look at the daily ATR. Euro dollar is a good example. It runs at about 90. Divide that by 3, gives you 30. And then divide that 30 by 3, gives you a benchmark of 10. Now, what that 10 gives you is meaning to go to trade. So if you're looking for a pocket of air between 2 levels or between 2 moving averages, however it is you trade, you need to fit 10 pips safely within it without any barriers. If you can do that, then you're on to a winner. And then your aim is to get a minimum of 10 pips, but ideally as much as you can get. But use your 10 pips as a safe benchmark. So in other words, when it passes 10 pips, pull your stop in to break even, and then you're happy. Just some thoughts, just a little bit of observation from this morning. I hope that sounds to be good advice. If you're stuck, I'm very easy found. You'll find all my contact details in the description, as will details of the Scruffy Squad, etc. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.